We've seen a bit of negative price momentum entering the crypto space. In this video, I'm going to explain why it's happening, and I'll point you to exactly what you need to know. Also, I'll give you tricks and tips on how to handle price volatility across the weekend. Let's run the numbers. Just a quick piece of housekeeping before we get into it. Many thanks to all the hundreds of people who registered to get the Profiting from CTKS Method structure course absolutely free. I'd like to thank everybody for their comments, and I'm integrating those questions and comments actually into the course, so the course will be delayed. I'll keep you updated. Now, let's get into it. The crypto market at the current time is being adversely affected by the US dollar currency index. Now, I'm going to show you something quite important here. If I invert that blue line, and what is the blue line? It is Bitcoin. So this is Bitcoin's price trajectory. Now, what has happened in the past 24 hours and what caused this fluctuation inside the main markets and therefore inside the Forex, which bled into crypto? It was the hotter than anticipated CPI. The hotter than anticipated CPI result caused a spike in the DXY, and it currently has some positive momentum. And when we look at the inverted Bitcoin chart, what we're seeing is as the dollar comes up, we expect Bitcoin to retrace. This is why it's so important to look at charts outside the chart that you're trading or investing in. It takes a while to just read an inverted chart, so I'll uninvert it for you and we'll just go through it again. So basically, as the DXY was coming up, it crushed Bitcoin. But as the DXY came down, it created a rally inside Bitcoin. Now we're seeing the DXY start to go up, and that's creating an SA or a sell arc currently on Bitcoin, and of course the entire crypto market. What happens from here with the DXY should be your central focus. Make sure that you understand where the DXY is going over time. It's changed from the VIX influencing Bitcoin really substantially now to the DXY, and not so much the US2 or the US 10-year yields. It's the VIX and the DXY combo together. Always remember that your chart is always influenced by other charts. When you see these intercorrelations and interconnections, you literally can't stop seeing them, but it does take time. And if you would like to learn all about that, there is a masterclass that you can sit through, and it will literally change your perception on financial markets forever. When looking at the DXY, and let's just zoom in a little bit closer to current price action, and you can see the dates here, the 11th and going backwards. What we need to do is to understand where the structure is inside the DXY. Now, how do we do that? There are several ways to do it. You can just draw random lines all over the place, or you can follow level 1 and level 2 standard certification to find the most statistically significant support and resistance lines in existence. One of the things to note, just recently, you remember that the DXY punched up and then got retraced. It retraced because there was so much structural resistance that the sellers were just too strong. That particular rally was faded down to around just a little bit north of the 102.9 mark. And that's where the DXY has been hovering around. It looks as though the DXY is confirming this structural level as support. Now that means that we're going to be magnetically and gravitationally attracted to north of the 103 level. Now it also means that there will be negative price momentum in all probability inside the crypto space. Negative price is not a problem, and it's something that you should take advantage of wherever you can. There is no question at all, especially if stagflation hits, that Bitcoin is going much, much higher. Something to keep in mind, the DXY often lags Bitcoin and the crypto market by about 1.5 to 2 hours. So you're getting already some forward advance warning that the DXY is likely to come up. This negative price momentum that's being shown inside the crypto market is largely because of the DXY. When we look at Bitcoin, and just remember that the DXY is not an exact ping, it's a little bit delayed by about 1.5 to 2 hours. What we can see just in terms of institutional sell pressure, we've had nothing but sell pressure for quite a while now. And that sell pressure will get absorbed by the market sooner or later. We also know that the DXY has upward levels of structural resistance, and if it gets up to those, it will, in all probability, reverse. Now, what Bitcoin is telling us right now is trying to say, hey, you know that DXY? I think it's going to not break out, but break down. Remember, the Bitcoin is in advance of the Forex market. Pretty neat. I would suggest that one of the things that you must be able to do is to read across charts and actually read through charts. Understand intercorrelation and interconnection. And most YouTubers just don't have the experience to do that. So please be aware of who you're gaining your information from. Inside the masterclass, you'll pick up the skill. Now let's apply level 1 and level 2 standard certification to Bitcoin, and let's just pop on the indicator. These indicators are available from CTKSmethod.org. Now, when we look at this, we can see that there is structural resistance or structural support just a little bit north of the 60,600 level. We're coming into an area of structural resistance, and we're just getting pinged back from there at the current time. Because there was a positive CTKS gap, that explained why the candle went up rather sharply. If we get across this level around the 61,200, there is more structural resistance ahead, and then at the 61,400. If we get progress like this, we would anticipate that the DXY is retracing. However, if the DXY is rallying, just make sure that you understand, in about a couple of hours, it will hit Bitcoin. And if that rally inside the DXY hits Bitcoin, it is likely to throw bearish momentum across it. And we've seen a lot of bearish momentum. The institutions are having a field day. They're selling down right, left, and center. Being flexible with the market is incredibly important. There is a structural support level at 59,800, but because there's a negative CTKS gap here and a negative one below, this is likely to be cut through, and we could well retest the 58,950 structural support level. For example, when you look at a CTKS gap, it's a gap between CTKS structural levels. And it doesn't matter if it's a level of support or resistance. If there's a gap in there, that gap is likely to get filled very, very quickly. And you can see that gap got filled in a matter of hours. It just literally rocketed downwards. But when it struck structural support around that 58,900 level, it bounced. It bounced up to where? The next structural level above. If it's not going below, it's going to the structural level above. And this is a really good thing to keep in your mind at all times. And then what do? Throughout the day, we grinded higher, literally, until we encountered this structural resistance. Structural resistance is something that you really need to know about. Many people talk about structural levels, but they have no idea how to draw them up and how they are actually formed. You need to do level 1 and level 2 standard certification if you want to do the most statistically significant structural lines. So what we can understand behind Bitcoin, Bitcoin is being influenced primarily by the DXY. It's also being influenced by the VIX as well. So if the DXY starts to spike up, that is throwing negative price momentum, and depending how it starts to go up from the DXY stance, we could end back at the 58,900 level. This is nothing to be concerned about. Bitcoin is definitely over time going way, way higher than 60,000. Don't worry about buying the bottom, worry about getting into it, because it's an apex asset class, the best performing asset class globally. And you can see, even though we got a big candle up, it stopped itself out at that structural level. You'll see this all the time. These levels are like gold. They're absolutely precious. I released a video inside the service to go through the Tier 1, Tier 2 and Tier 3 charts, basically row 1 to row 7. Here I've inverted Bitcoin across the DXY. Here is Bitcoin just normally against the euro dollar. You can see that we can use Forex pairs to actually predict which direction and what magnitude Bitcoin and of course the entire crypto market can change. This is what you should be doing each day. And I explained inside the service video how you should look at these particular 4 pairs of Forex. They're very valuable. The reason that we do the cheat sheet, there are a lot of things to look at. When you first get into trading and investing, indeed you can be in it for a decade and not look at other charts. And that's okay because nobody teaches you how to do that. But when we look at the inverted VIX, which gives us a directional bias on not just the stock market, but also the crypto market. It may not look like it, but it really does. When we look at something like this, we can see the inverted VIX is still elevated to the negative side. So that means the VIX is still elevated to the positive side. We can also see that despite all the conversation of global liquidity going through the roof, that's just really China's impact on things. US liquidity is not going anywhere but down. It's very important that you learn how financial markets actually work, and that's a lot different than a lot of the retail influencers out there. I wish I could say that they know what they're talking about, but the vast majority do not. But boy oh boy are they convincing, and also convincingly wrong. The reason I say this, it's very important to make your own decisions inside the market. For example, you need to know how the variety of different charts actually impacts what you're putting money into. If you don't understand that, you are severely disadvantaged. A lot of people inside the stock market will not look at crypto, and that's a huge mistake because crypto throws signals for the stock market. You can see a potential weakening inside the S&P 500, inside the Dow, absolutely playing out at this time inside the Russell and the Nasdaq. We could get a retracement backwards. Now, if that happens, that's a perfect opportunity to get involved in the markets because what we're seeing is that the markets have a lot of bullish and positive momentum. These retracements are to be participated in, not to be scared of. For example, if we were looking at the DAX, we can see that Bitcoin was coming down and the DAX went momentarily up before it slid back. But Bitcoin was starting to recover. If you can work out these timings, it is undeniably valuable to you. And don't look for one-to-one correlations. Seek to understand gravitational pulls. I'll give you another example or another illustration. Here we can see Bitcoin was weakening as the S&P 500 was coming up. But then what happened? Bitcoin is a front runner. You must keep your eye on Bitcoin. A lot of people don't want to look at Bitcoin because the big fund managers say, Bitcoin, Warren Buffett, rat poison, all that kind of junk. But the truth is that now all getting into it and basically saying, I was wrong. It's like digital gold and you should get some now that we've got it. We'll sell it to you. It's very important to understand Bitcoin's gravitational pull inside the market. If Bitcoin is going up, all of the alts are going up. If Bitcoin is coming down, the alts will be coming down. So please keep your eye on the direction of Bitcoin. It really matters. It's also a pretty good idea to keep your eyes on the different ecosystems, such as the gaming ecosystem, the Ethereum ecosystem. Inside the service, Doge and Solana have done really well. Look at WIF. It's just piling up there inside the memes. Distributed computing and file storage, Arweave and BlueZell, not too bad. AI and big data, GLM out in front. WIF in the Solana system, and real-world assets, True is true to form. Inside the wallet ecosystem, SXP is just going nuts. There's no other way to explain it. DeFi, Rose is looking good. GLM in DeepIn. SXP again in Binance Labs. FTT is the best winner out of centralized exchanges. And inside the decentralized exchanges, KNC. And have a look at Threshold. Threshold is doing really, really well. Metis is doing well in layer 2. Bitcoin's gravity is very important to understand. If Bitcoin is coming down, what happened to Ethereum? It came down. What happened to Binance Coin? It came down. What about Solana? Yep, it came down. What about XRP? Well, it rallied a bit and then banged on the head, because that's the power of Bitcoin. And it doesn't single out projects. It does this to every single project. ADA came down, and this is the entire crypto market. You can see how closely they follow each other. One thing that I see here, which is a little bit disturbing, is the divergence from BNB and concerning Bitcoin coming up and BNB coming down. That is not actually what we want to see. We want to see something more like what Solana is doing and what Doge is doing, outperforming Bitcoin. Understanding the direction of your crypto projects is incredibly important. One of the things that you just want to bear in mind at the current time, total crypto market cap is under pressure. If people say it's all looking good, that's actually not technically correct. It's not looking good for total crypto market cap. All we've seen is a retracement and a retest. We will need to get above this particular level. Just consider the previous high here. This lower high. We'll need to get above that to confirm a bullish trend. If we wobble around here during the weekend, that's okay. That's something like that could be on the cards, definitely. And you can take advantage of that. But if we get a retracement down here because the DXY starts to spike up, be aware of that. That is very important. My suggestion across the weekend, make sure that you're looking at the structural levels because they're so incredibly important. They will tell you so much as to where price will just flatten out, and if it doesn't get above, it's going to the level below. And if it doesn't get above that, it's going to the level below, and so forth and so on. So please keep your eye on Bitcoin and total crypto market cap structure throughout the week. Across the weekend, it's really good to just improve your capabilities of looking through other charts. On CTKSmethod.org, there's a cheat sheet. It's absolutely free and you can download it. When you understand Rule 448, things will not be such a surprise. You would have already seen that the DXY and the VIX were in control of the crypto market, and they remain so. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. And I thought inside the comments you might like to talk a little bit about Rule 448, about how charts are moved. Your chart is moved by other charts. And this basically means the chart that you put money into is actually moved. Those prices are moved not only within its own structural levels, but due to the structural levels of other charts. Have a great weekend, my friends, and see you soon.